Securities. So let's welcome on board Shilpa Kumar, the MD and CEO. Shilpa, morning. Glad that you could take time out and join us. Tell us a little bit more about your profit growth that's been at 13% despite the fact that revenue growth has been at 9%. What's leading to this higher run rate on the profit front, and are we seeing benefits of operating leverage kicking in the quarter gone by?
What happens with a company like ours, where bulk of our business is really transacted digitally, we do get the benefit of, operating leverage. So that's one of the very fundamental things, that works for us. And therefore, even though our top line has grown at about 9%, we have actually found that our bottom line has actually grown faster and has grown at 13%. Which really means, two things. One is our cost to income ratio. It has stayed around 54%. So that's, the first thing. The other is really the fact that, our top line has grown through a variety of means. So not just broking, which in this market was naturally a muted growth, but also the fact that, we could grow our distribution business, we could grow our advisory business much faster. So that really helped us to reach that 9% revenue growth number.
Right. What has been the share of non-broking revenue? I mean, that's come in at nearly about 37%. Which segments are leading to growth in non-broking? What would be the growth trajectory that you foresee in the near term as well? If you could highlight that.
Primarily our non-broking revenue, I would say, consists of, two parts. So one is the distribution business that we have, which also includes our wealth management franchise. And the second component is really our investment banking, where we do equity capital market issuances, but we also do our advisory businesses. So what we've really focused on in these times of muted equity market conditions, the way we think about it and what we focused on is in the distribution space. We are looking at increasing cross-sell to our existing customer base, number one. Number two, given our focus on trail giving assets, really our focus even on the distribution side is mutual funds, where we actually work very actively with our customers, especially through tools like SIPs. And if you look at the SIP growth that we have shown, we've actually gone from something like 0.7 million active SIPs to something like 1.1 million active SIPs, which is like a 55% growth. So I use this number just to illustrate that even in market conditions like this, because of our continuing focus on SIPs, we are able to really maintain our mutual fund income. The second area where we've shown good growth, which is almost 19%, is really on the advisory and investment banking side. And like I said earlier, in these market conditions, we focused on M&A transactions. We've focused indeed on block deals, on also on OFS, and a variety of equity capital market transactions to really show 19% growth on this side of the business. So with that, overall, the contribution of non-broking businesses to our total revenue pool has increased to 37%.
So currently the share of the non-broking revenue is at 37%. Where do you see this share moving over the next 2 years?
Right. So, the way I look at our revenue pool is there's some businesses which I would say are at mature stage. And there would be some businesses which are still in growth stage, and there are equally other businesses which are much younger and more recently seeded. So if you look at this whole portfolio of businesses that we have, I think definitely broking is a mature business. We've been in this business for 18 years. But if you look at other businesses that we have, which is both distribution as well as wealth management, I would say that these are growing businesses for us. As is our advisory business, and therefore as these businesses mature, given the fact that we have invested in them over the recent past, I think you would increasingly see pool of revenues from those businesses go up.
Okay, but your broking revenue market share stands at about 9%. What would be your growth strategy, Shilpa, to further grow the market share in the broking business?
One important thing is, I think overall in India we are seeing greater participation of savers in equity and equity instruments. So whether it be direct equity or mutual funds. So I think the first stage of our strategy is really to keep growing our customer pool. And if you look at our number of customers, we've actually added 1.1 we've added 1.1 lakh customers in this quarter, which takes our total of operational accounts to something like 4.1 million accounts that we have with us. That's the first. The second is also activity levels, and I'm happy to report that the number of active customers with us has also gone up very well over the last year. And we have more than 800,000 customers who are active with us over the last 12 months on our equity platform alone. So the second part is really activating the customer pool. And I think the third, which is really important to us, is to continuously come up with new products, new ideas, which actually make investing in equity easier for customers, whether they want to deal on the equity delivery side or whether they want to deal on the equity derivative or non-delivery side. And I think it's a combination of this continuous reach out to clients as well as continuous innovation, I think, and continuous engagement with our customers. That's really the strategy we hope to follow in the future.
Right. Speaking about customer acquisition, any plans to acquire customers via inorganic route?
Yeah, so clearly ICICI Bank is an important partner for us in acquiring clients. But I would say that we are constantly focused at looking at different means of reaching out to clients across India. So for example, illustratively, we have our own branches. We have 200 branches in 75 cities through which we reach out. We have close to 5,000 sub-brokers and IFAs who we partner with. And more importantly, being a digital shop, I think using technology as a means to reach out, especially at a time when regulators have really given you a number of tools to reach out directly through digital means, I think that's really the biggest opportunity, and we are definitely focused on all of these, in addition, of course, to working with ICICI Bank.
The cost to income ratio stands at about 54%. What are their plans to reduce it further?
So, we do have the advantage of being primarily a digital shop. So close to 95% of the equity business we do is done online. Around 90% of our mutual fund transactions are done online, and therefore operating leverage is a focus area for us, and we will of course continue to try and increase our top line while containing costs as a means of actually getting better operating leverage. So directionally the effort would be in the area of actually improving on the cost to income ratio in the years ahead, and we would certainly stay focused on that thought.
Okay. Lastly, Shilpa, any plans by ICICI Bank to further reduce stake in ICICI Securities, and any possibility of any new shareholder taking a high stake in ICICI Securities?
So, I think the only thing one can say, with certainty is that SEBI regulations really require the bank to hold, 75% and less over a period of 3 years. So I think that's certainly one, clear, number we would have in mind. But other than that, of course, it is for bank to constantly evaluate opportunities and to, consider the value they have created over here. More importantly, I think is the fact that, if you look at kind of investors over the period, over the last 6 months, we have seen institutional investors increasing their stake, particularly mutual funds.
Okay, thanks very much, Ms. Kumar, for taking us through those numbers and how the